Assalamualaikum warahmatullahi wabarakatuh. Today, we will be presenting a financial analysis of Nestle Malaysia Berhad and Dutch Lady Milk Industries Berhad, two of the leading companies in Malaysia food and beverage industry. Both companies are well established and listed on Bursa Malaysia, making them suitable for financial performance comparison. First, let's further dive into Nestle Malaysia Berhad. Nestle began in Malaysia in 1912 as the Anglo-Swiss Condensed Milk Company in Penang. After independence in 1957, the growing need for the jobs and more product choices led Nestle to set up its culinary products division in 1960s, introducing the popular Maggi brand. The company has been listed on Bursa Malaysia since 13 December 1989. Today, its product range includes noodles, chocolates, ice cream, milk, culinary products, cereals, yogurt, and many more. Well-known brands such as Milo, Maggi, Nescafe, and KitKat has become household names among Malaysians for generations. On to Dutch Lady Milk Industry Berhad, or Dutch Lady Malaysia. It is one of the largest Malaysian dairy firms. It was established as Pacific Milk Industries Sendirian Berhad on 28 May 1963, producing sweetened condensed milk at its factory in Petaling Jaya, Selangor. It was the first production facility for its parent group outside the Netherlands. The firms then adopted the name Dutch Baby Milk Industry Berhad in 1975 and later renamed itself to Dutch Lady Milk Industries Berhad in 2000. Its product portfolio includes UHT milk, pasteurized and sterilized milk, formulated milk powders, yogurt, and creamers under well-known brands such as Dutch Lady, Friso Gold, and Debbie.
Thank you, I'm Haris, for the introduction. Now I'll talk about the liquidity ratio of both firms, Dutch Lady and Nestle Malaysia Berhad. To start, I will talk about current ratio. Current ratio of Dutch Lady is 0.89 and current ratio of Nestle Malaysia Berhad is 0.52. It means that both of the firms are able to pay current liabilities using its current asset. For comparison, current ratio of Dutch Lady is higher than current ratio of Nestle Malaysia Berhad. Next, I will talk about quick ratio. Quick ratio of Dutch Lady is 0.43 and quick ratio of Nestle Malaysia Berhad is 0.19. It means that both of the firms are able to pay short-term liabilities without depending on their stock and prepayments. For comparison, it indicates that the quick ratio of Dutch Lady is higher than quick ratio of Nestle Malaysia Berhad.
Now we are moving on to profitability ratios of Nestle and Dutch Lady Company. As noted on the slide, these ratios are essential financial tools used to evaluate a company's ability to generate earnings relative to its revenue, assets, and capital. So now let's start with the margins on the left side. Nestle leads with net profit margins of 7.5% compared to Dutch Lady 6.88%. This means Nestle retains slightly more bottom line profit for every ringgit of sales. We see a similar trend in the gross profit margin where Nestle sits at 30.35% versus Dutch Lady's 29.04%. This indicates that Nestle manages its direct production cost slightly more efficiently before operating expenses are factored in. However, the most striking difference appears when we look at how these companies utilize what they own. For return on asset, Nestle generates roughly 40 cents of profit for every ringgit invested in assets, noticeably outperforming Dutch Lady's 9.5%. And finally, look at the return of capital employed on the far right. There is a massive gap here. Nestle achieves an impressive 83.02%, while Dutch Lady is at 25.8%. This highlights that Nestle is exceptionally more effective at turning its long-term capital into operating profit. In conclusion, while both companies are profitable, Nestle demonstrates significantly stronger financial efficiency and capital utilization across all four of these applied metrics.
Thank you, Ali Faizun. Next, I will present about the efficiency ratio analysis between Dutch Lady and Nestle Malaysia. So what is efficiency ratio? Basically, it's used to measure how effective a company uses its asset and manage its resource to generate sales and profit. In this analysis, we compare three ratios. The first one is inventory turnover. The second one is average collection period, and the last one is total asset turnover. So, firstly, inventory turnover. It showed that Dutch Lady recorded an inventory turnover 4.67 times, while Nestle achieved 5.53 times. This means that Dutch Lady replaces its average inventory about 4.67 times during the account period. So whereas Nestle replaces its inventory 5.53 times. A higher inventory turnover indicates that inventory is sold and restocked faster. Therefore, Nestle is more efficient in managing its inventory, reducing storage costs and minimize the risk of waste inventory. Moving on the average collection period. So based on the slide, Nestle takes approximately 27 days to collect payment from its customer, while Nestle only takes about 9 days. So what is that supposed to mean? A shorter collection period is more favorable because it reflects faster of cash collection and better credit management. Hence, it showed that Nestle demonstrates stronger efficiency in collecting receivable, which improve in cash flow and liquidity. Lastly, total asset turnover, which is Dutch Lady has a total asset turnover 1.38 times compared to 1.89 times for Nestle. This means that for every 1 ringgit invested in assets, Dutch Lady generate 1.38 ringgit in sales, while Nestle generate 1.89 ringgit in sales. Since Nestle generate more sales from the same amount of assets, it shows that Nestle using its asset more efficiency. Next, I will pass it to the presentation to the
Moving on to
idea.
leverage ratio, starting with the debt ratio, Dutch Lady recorded 47% compared to Nestle's 84%. This means 47% of Dutch Lady's total assets are financed by liabilities, while for Nestle, a staggering 84% of its assets are debt financed. This clearly shows that Nestle carries significantly higher financial risk compared to Dutch Lady, which maintains a stronger and more stable equity position. Moving to the debt to the equity ratio, Dutch Lady recorded 90%, meaning for every 1 ringgit of shareholders' equity, the company owe only 90 cents to creditors, showing balance and healthy capital structure. Nestle, however, recorded an 5.32 times, meaning for every 1 ringgit of equity, Nestle owes 5 ringgit and 32 cents to creditors. This confirms that Nestle is heavily depending on debt financing, with creditors contributing far more capital than shareholders. Dutch Lady's significantly lower ratio reflects much lower financial risk and a more sustainable capital structure. Finally, for time interest earned, Dutch Lady recorded 80.4 times while Nestle recorded 12.56 times. This ratio measures how many times a company can cover its interest obligation from its earning before interest and tax, or as we know, EBIT. Both companies are comfortably able to service their interest payments. However, Dutch Lady's higher ratio of 80.4 times indicates stronger interest coverage and a lower risk of defaulting on its debt obligations compared to Nestle's 12.56 times.
Now let's take a look at performance comparison. Dutch Lady has higher liquidity compared to Nestle with quick ratio of 0.43 and 0.19. Nestle has produced better profitability with net profit ratio of 7.45% compared to Dutch Lady of 6.68%. Nestle is also more efficiency in managing inventory with total asset turnover of 1.89 times compared to Dutch Lady with only 1.38 times. However, Nestle is a much more riskier in debt financing compared to Dutch Lady with debt ratio of 84% and 47%. As a potential investor, Dutch Lady is the most preferred choice to invest. The reason is Dutch Lady has better liquidity and have more current asset to repay its current liability compared to Nestle with current ratio of 0.89 and 0.52. Dutch Lady has stronger fundamental with better interest coverage, with that Nestle with 18.4 times and 12.56 times. The main factor Dutch Lady is suitable to invest is it relies much less on debt financing compared to Nestle with debt to equity ratio of 90% and Nestle with 532%. That is all from us. Thank you.